I highly recommend ETFs that I'll save for the rest of my life. ETFs are investment trust funds that are traded like stocks, which can be invested in a variety of assets, which is advantageous for diversifying portfolios. In particular, if you're considering a long-term investment, it's important to choose a product that has both stable returns and growth potential. I personally highly recommend VO ETF, QQQM ETF, and SCHD ETF as ETFs that I will collect for the rest of my life. First, the VO ETF is the Vanguard S&P 500 ETF, which follows the S&P 500 index. The S&P 500 index is a representative stock index that reflects the stock prices of the top 500 largest companies in the United States. The S&P 500 is a representative index of the U.S. economy and is relatively stable with large blue-chip companies. The VOO ETF distributes risks by investing in 500 different companies. You can minimize the impact of a company's stock price decline on its overall portfolio. Vanguard is known for its low operating costs, and VOO ETFs are also attractive to investors with lower commission costs of 0.03%. VOO ETFs have a lot of trading volume, so you can easily buy and sell them. VOO ETFs can yield stable returns in the long run. The S&P 500 has had an average annual return of about 7 to 10%. Second, the QQM ETF is the Invesco NASDAQ 100 ETF, which follows the NASDAQ 100 index. The NASDAQ 100 index is made up of the top 100 non-financial companies centered on technology stocks. The NASDAQ 100 has high growth potential as it is centered around technology stocks. The QQQM ETF can invest in innovative companies such as Apple, Amazon, and Microsoft. The QQQM ETF offers the opportunity to invest in tech stocks at a lower commission cost of 0.15%. The NASDAQ 100 has a high growth potential centered on technology stocks, with an average annual return of about 12 to 15%. Third, the SCHD ETF is a Schwab US Divide Equity ETF, consisting of US stocks that offer high dividend returns. The SCHD ETF consists of stocks with high dividend yields, so you can expect regular dividend returns. Companies that pay dividends are usually financially stable and maintain steady cash flow. The SCHD ETF can invest in dividend stocks at a lower commission cost of 0.6%. The SCHD ETF is composed of dividend stocks across various industries, diversifying risks. The SCHD ETF has had an average annual return of about 8% to 10%, combined with dividend yields and rising stock prices. VOO ETFs deliver stable returns, QQM ETFs deliver high growth potential, and SCHD ETFs deliver regular dividend returns. When you combine these ETFs to form a portfolio, you can aim for long-term asset growth while managing various risks. Long-term investment success requires constant investment and patience. If you're not swayed by volatility and keep your investment strategy steady, you'll be able to build a stable, high-growth portfolio that you can raise throughout your life with the VOO, QQQM, and SCHD ETFs. Please subscribe, notify, and like. It's a great help for me to produce a video. Thank you.